Now, Vineeta Sharma is now joining us. Vineeta, welcome to the show. First off, what's your read into the Cipla results? From the point of view, the EBITDA and net profit again, the stock is still maintaining higher. Is the result again meeting your estimates?
So, result is a little below our expectation as far as EBITDA or even top line or the bottom line is concerned. So, we were expecting around 4,200 crore of top line, which is around 4,077. And I am suspecting some weakness on the, Europe business because there the company has been facing some tender businesses of the company has been facing challenges due to weak funding environment. So, I think that could have been seeing much more pressure as to what we were expecting.
Right, and Vineeta, what should be the reason this time again behind a miss on revenue estimate? Is it looking like perhaps a realization miss or some sort of volume miss here?
So I think there is a continued realization miss, also a little bit on the volume because we were expecting some of the limited competition product like diclofenac gel or albendazole, all these to contribute much on the top line for Cipla. So, and I think that has been a little on the back seat because they are limited competition product. We were expecting good volumes to come from them. So, I think that could have been. On the EBITDA margin, I think research and development expenditure continuously for Cipla has been inching upwards, because they have been investing into limited competition products, inhalers, and all these are going to, a clinical trial related to Advair or some products. So I think that could be also one of the reason why EBITDA margin must have been a miss.
Right.
Now I need to go into the details and that we need to understand it from the management.
Sure. Vineeta, just one word on the trends here. Employee expenses, they remain at par with the last quarter trend here, and other expenses which we were just talking about, that is decline versus the last quarter, still high versus the last year, but it's a decline versus last quarter. Is this something which you want to read into the fourth quarter, or the remedial cost, could those be decreasing, or this could still remain elevated?
So I think it should remain elevated. I am not expecting them to come down. Though I think the cost should remain elevated, but that should have been compensated by the higher realization and higher top line growth, which has not been the case. And one important trackable will be, there is 20 to 25% revenue is coming from the Goa facility, wherein inspection has started on 21st of Jan. So that update also needs to be updated from the management. So these are the main trackable we need to understand from the company. As of now, I think it's a little lower.
Pricing erosion leveling off. Our peers, the generic manufacturers,